I think you struggle to find any negative impact so far in the data. In fact, perversely, the fact that both sides have been pre-announcing tariffs by 4 or 5 months means that firms have had an opportunity to import into the US or into China ahead of these tariffs. So if anything, this trade war so far has actually probably been a positive boost to trade volumes across the Pacific. In fact, when you look at trade data, if you look at the export growth in Asia, in dollar terms, it's not slowing down at all. And in the countries that have reported second quarter GDP so far, export volumes are actually accelerating. So, as I said, up till now, if anything, maybe even slight positive. Now, though, of course, in July, we're starting to see the tariffs actually being imposed. And so this will gradually impinge on exports as the breadth of the tariffs widens from the initial $50 billion in the first round to another probably $200 billion subject to tariffs taking effect in, say, October this year is when I expect it'll happen. And who knows, possibly more to come. So I think we'll probably see exports taper off a little bit over the next couple of months, and then maybe again a bit of an artificial boost to get ahead of the next round of tariffs. Eventually, it's going to have to impact trade. It's going to have to impact growth. But most people's estimates, including our own, are still pretty modest. You might be thinking of annual GDP next year in China off sort of 30 basis points because of what's been announced so far. So not hugely important. Noticeable, but as I said, so far, you don't see it in the data.
Okay, fair enough, and let's hope it stays that way, although a lot of people are worried that it won't. And if it doesn't, Dr. Spencer, I guess the thing is, I mean, people have thrown out the R word time and again over the last couple of months, maybe a 2019, maybe 2020 story. Doesn't seem to be reflected, or markets don't seem to be telegraphing that, nor yields right now. But if it does come to that kind of situation, are we talking recession or maybe more stagflation, low growth and high inflation?
Well, initially, I mean, if we're in that scenario, which we don't expect, I mean, you can paint a picture. If the U.S. withdraws from NAFTA, does impose the tariffs on Japan and Europe and China that have been threatened, you could be looking at a U.S. economy that's in recession by late 2020. We think we're going to avoid those worst case. And indeed, the deal that was struck recently between the U.S. and European Union to at least keep talking and suspend the imposition of tariffs, and I'm hopeful the same talks with Japan that are ongoing could give us a similar outcome. But if that's what happens, then initially it will look like stagflation. Growth will slow down while inflation is still high. But I would expect inflation rolls off pretty quickly in that scenario.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.